Morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw, Senior Market Specialist at FXCM. My email address, rshaw@fxcm.com, and today is Wednesday. It's the 9th of March 2022. Just going to bring up our high-risk investment morning, and I'll keep this on screen for a few moments. All right, and here's our market commentaries disclaimer and our references. And I'm going to just bring up the chart. So the one we'll actually start off with, we don't look at this one all that often, but we'll take a look at the 4-hour UK oil to start off with in terms of chart analysis. But before we even get to the chart, let's go through the CNBC morning note and see what the headlines have to tell us. So the headline reads, European market set to rise as Russia-Ukraine volatility persists. European markets are set to climb on Wednesday as investors continue to monitor surging commodity prices and ongoing war in Ukraine. Stocks across Europe fluctuated on Tuesday before closing slightly lower as US President Joe Biden announced that the US will ban imports of Russian oil, marking a major escalation in the international response to Moscow's invasion of Ukraine. And that's why we'll start with oil, just to see what that potentially does to the situation. The move risks is exacerbating existing price surges on supply concerns and expectations of expectations of stronger growth. Moves risks exacerbating existing price surges on supply concerns and expectations of stronger growth. And crude oil prices bounced once again following Biden's announcement, which is not quite true, but we'll examine that in a moment. International benchmark Brent crude was up above $130 per barrel early on Wednesday morning in Europe, while US crude hovered above $125 per barrel. Shares in Asia Pacific were mixed on Wednesday, with Hong Kong's Hang Seng Index leading losses among major indexes. US stock futures pointed to a higher open on Wall Street later in the day after another choppy trading session on Tuesday, so all major averages closed deeper into correction territory. European investors are also looking ahead to the ECB's monetary policy meeting on Thursday for signals on how policymakers are approaching inflation and the fresh challenges posed by the conflict in Ukraine. Corporate earnings continue to roll in across Europe, with Vivendi, Adidas, Continental, Deutsche Post, LNG, and Prudential among the big names reporting on Wednesday. All right, let's take a look at the chart. Hey Howard, good morning to you. Nice to have you on the webinar. Yeah, I actually have the Pring book. I've got Martin's book. All right, let's just let's take a look at the hourly. Actually, let's start off with the hourly. All right, here's the announcement. So what's going on here? Well, why is there this huge decline? The US has just announced that they're banning imports from Russia, and the market sparks down before normalizing. What's going on there? And I think it's a conundrum. The explanation I have is as follows. Okay, so the explanation I have is as follows. The gap over here was the gap open on Monday. So here's the gap open on Monday. We've got to ask ourselves what caused the gap open, and the gap open was caused by a few comments, primarily from the U.S. Secretary of State Blinken, who said that there was discussions to ban Russian oil. Nancy Pelosi came in with some comments as well about banning. By and large, here's the market discounting that information. Okay, here's the market discounting that information. So this is, what do we call this? Okay, this is what we call the rumor. Okay, so here is the market buying the rumor, and what do we call this? This is called selling the fact. I don't see the big gain here unless you are trading literally in sort of billions of dollars. Your margins here are extremely tight, so you kind of you've got about, this is your margin for error. So you've got to be selling. You've got to be selling here, okay, in order to be profitable. Otherwise, you know, that's. So I think that's the explanation, is that the gap up, that was the buying. Here's you're selling the fact. We see this constantly in the markets. Buy the rumor, sell the fact. Buy the rumor, sell the fact. However, so I think that's the explanation, because I did get an email this morning from KD just asking. Unfortunately, he's not making the webinar this morning, but he just asked if we can perhaps address it. And that is what I think has taken place here. However, so that was the initial response. Okay, so buy the rumor, sell the fact. But where we now is actually still the interesting part. We are clearly still in an island. Can you guys see this as an island? You see this as an island? Let's go to that 4 hour. I think it's really useful on the 4 hour. See this island? So we said here's the gap up, and then what we spoke about on Monday, is it a runaway or an exhaustion gap? I still think that question holds. Right now, the fundamentals do seem to be suggesting runaway gap, because yesterday's announcement by President Biden, I think, is significant. So if it is a runaway gap, we would expect the breakout to move in this direction. Okay. What would be very interesting, just on a theoretical basis, so this is now just sort of putting forward a technical theory that is floating around in the textbooks. I can't remember where I read it, but you have an island reversal. So we spoke about this reversal, didn't we, on Monday, where you kind of have a gap up and then it gaps back down, and there's your sort of island reversal. But it still can have a complex form, and we could be in the midst of some sort of complex form at the moment. So just like we have a complex reference candle here, you could sort of see maybe something like this, right? So you can see there's the gap up and then there's a gap down, leaving the island here. I don't know, to be honest, I don't think this is going to take place, because I think the demand supply dynamics here are a real factor that we need to consider. So in terms of the demand and supply dynamics, is this 129 now? Has that factored in? Has that discounted all available information? Because if it's discounted all available information, this is the this price then still is very much runaway or exhaustion. But if we still have to discount in the fact that there may be supply constraints, well, then price typically moves up. And let's just bring up our Microsoft Paint. I just want to do just a basic demand supply. We're not going to go into in too much depth here. We did, I think we did it on Monday in a fair amount of detail, but you've just got a basic demand and supply. And what seems to be happening here is the supply curve is shifting, okay, based on the news that keeps coming out. So we're kind of getting these shifts up here. And the result is that, so demand's not changing, the supply is changing. And you're kind of getting the new equilibrium prices are at higher and higher levels as the quantity comes down. Let me just show you prices on this axis. And quantity is on this axis. So you can see that the quantity, as the supply curves are shifting in, quantity is moving to the left. So we're getting less here, 0, but at the same time, we're getting prices moving up. So the prices, here was the original, here's the next, here's the next. So that's, so you can see, so prices have jumped now to $130 a barrel on Brent, and that's because of declines in quantity. The question for us is, how many more shifts are we to expect here? How many more shifts are to be? Because the more shifts, the higher the price, the lower the quantity, you see. So what the question I'm asking, okay, which of course none of us have the answer to this, is this the current equilibrium? Is this got everything priced in? Is the latest shift in the supply curve fairly accurate for our fundamental position? And if it is, okay, well, then we've got to see if this actually turns into a range. If the supply curve has not finished shifting, let's make this one blue, then we should see further upward spikes. But if we have overshot and it comes down, then we should see the price moderating, okay? And if it's moderating, who knows, maybe we get that island reversal. So it's very much a theoretical sort of analysis, because I don't know if we're going to get further supply shocks. There is, so in terms of the oil bans, I think there's been a partial response from the UK as well, but the countries that really rely on oil imports to a large degree, such as Germany, they're not participating in this ban, not yet anyways. The reason is because they simply can't do it. It would really cause a huge supply shock on a localized basis. So I'm just wondering if we are at the kind of apex here or not. It's of course interesting for us to keep an eye on this. What we'll do is we're going to draw in a little rectangle here. What we're going to do is we're going to draw in a rectangle here, and we're going to see which way it breaks. Clearly, a break up would be the runaway gap in action. If it breaks down, well, that's the exhaustion gap in action. By the way, now remember, we got the 4-hour chart here, so we still got to look at the primary trend. By the way, on the 4-hour basis, it does look as if we're getting some sort of momentum dip here, but we're very early. The European trading session is only, the cash markets are only opening in the next kind of a few seconds, you know. So we'll just have to keep an eye on this. But clearly, buying oil at the gap over here, unless you've got a huge leveraged position or you're dealing in sort of billions of dollars, you haven't got any real advantage here. Not yet. Okay, we're pretty flat from the week with some oscillations, you know, above the and below the median price. All right, so the market's just opened, so my system's just hanging in for a second. Give me a moment for it to normalize. I think just before we go into the other instruments, it's worth our time. It's worth our time taking a look at the weekly chart. Let me just see. I've got a few comments here just while the charts are settling. Oh, okay. So yeah, Anna's just saying Boris announced that imports will be completely phased out by December. How easy would it be to shift supply to other countries? I don't think easy. My understanding is not easy at all. The US has been warning Germany about their dependence of Russia oil and gas. Yeah. So how easy is it to shift to the OPEC countries? I don't think easy at all. Most of the oil production. I'll have to find the charts for you, but I'll do it tomorrow. Most of the oil countries are producing oil below that of pre-COVID levels, and that's not because of any other reason except just they don't have the capacity or the capability to pump more because of aging infrastructure that's not working. The only two OPEC countries that I believe have the ability to increase would be the Saudis and the United Arab Emirates. I think those two have capacity to increase, but the others don't. Subject to correction again, Anna, but that's, I mean, I looked into that for the quarterly report that we did that we released sort of earlier this year. We're working on another quarterly report, and I'm going to look at that again. But that was kind of the information that I had garnered. In fact, Russia, as far as I know, can't increase its oil production because of infrastructure. I can't quite remember regarding the US, but US production was also quite down. So I would suggest maybe if there is going to be some sort of replacement, I would suggest that it's possibly not going to be from the OPEC side, but possibly from the US side. But I know the US side took this huge toll during COVID. Also, the oil grades are different, you know. So you use the oil grades are different. They're used in different sort of types of industry. But Russia can turn the taps off, even if it's not easy. They can turn the taps off, but I think that would be financial suicide. They're already getting isolated. You know, they're just sort of exacerbating an already bad situation for them economically. Let's take a look. By the way, they did threaten to do that. But the more I thought about it, the more ridiculous I thought it sounded. I thought it was an idle threat. But they did certainly threaten to turn off the taps. Let's just go through to the weekly chart here. And you can see that the weekly chart certainly is in bullish territory. Okay. So we'll monitor this as well. And from a weekly point of view, so we're looking at kind of the island reversal. Let's get this out of the way. You can see this is a doji, right? The market's quite uncertain in terms of, is this a runaway or exhaustion gap? This is still to play out. And of course, I don't have the answer. It all depends. It all depends on the supply curves. Which way does it move, left or right? Left or right from here? And I think that's where the market sort of flummoxed at the moment. And what would be interesting, just by the way, just to kind of carry our previous thought a step further, is perhaps you get that island reversal, that complex island reversal on the 4-hour, and perhaps you get the single bar island reversal on the weekly. It's just something that may play out. So Monday is going to be just out of just sort of technical theory, it would be an interesting chart to consider. There's no doubt about it on a weekly basis, we're trending up. Again, caution here, in my opinion, is we're overbought. I understand the emotional impact of the oil market right now. It's terrifying because we've got a real stagflationary scenario on our hands. And again, this would be a technical exercise just to see how long we do stay overbought for. Clearly, the longer the emotion is running the market, the longer we stay in extreme areas. But at some stage, it will correct. And the longer we stay in the extreme area, the more I would expect the correction to be. In other words, if we are here for 6 months, if we do see oil run to extremely high prices or hot prices, when the weekly RSI normalizes, I think there will be a heavy correction. Again, just the it just runs out of all that kind of momentum that an market needs, and there's just nowhere to go but down. Again, we're just going to have to see how this plays out. It's like an elastic band, exactly. The longer you stretch it, and it kind of it snaps back. And the obvious example here, although it is different in terms of circumstances, would be Bitcoin. So I just go back to this area here. It doesn't look like much because this is a logarithmic chart. If I change this to arithmetic, I think we'd get a better view. Let me just see. It kind of is it's a 50%. The true scales on the percentage. The best way for me to actually just show you guys is to draw in a Fibonacci. So here's the 0%, here's the 100%. It's dropped down to below 50%. Although it doesn't look like it, the only reason it doesn't look like it's because this is a logarithmic scale. But clearly, that's a huge, just like Anna says, it's like an elastic band. So Bitcoin was stretched, and then it shoots back, and then it gets stretched, shoots back, and we kind of need to keep an eye on Bitcoin. Now, it's having actually a pretty good week. In fact, I think we do have, now that I'm talking about Bitcoin, I know that we have a crypto minute. I'm going to just carry on going here for a while. I think there's still some issues we need to talk about here, so I'm begging your pardon. We'll do the crypto minute over here. Let's just go through to the DAX. All right, and the DAX here is, so we said it's oversold, okay, and you can see that it's now starting to move back. So we've always said at some stage there is going to be support coming in because there's going to be value in the market. The issue that we've got to look out for is do we get another lower peak here? In other words, we don't want to get caught up in what we call a bear market rally, because we are in a bear market. Lower peak, but a lower trough. That's a bear market. Okay. Now, if we go down to the hourly chart here, what you want to look for here is the stochastic. Okay, so you want to take a look at the stochastic over here, and if the stochastic makes it into the upper 80 and holds that level, it's all about holding this level. Then I would expect that the markets are trying to buy into the dip at the moment. They're trying to buy the value that the DAX is presenting. But we mustn't forget we're in a bear market. So these bear market rallies, that's where the damage is done. It's not done on the initial fall. It's done when everybody expects the bear market to be able to pile back in and then we get the next leg down. We don't want to be trapped like that. So we just need to be conscious of it. The longer that the stochastic stays under 20 or at the 20, the bear market is going to be unfolding. So just keep that in mind when we do. So we are seeing what looks like a concerted effort to buy value. It doesn't take the uncertainty away. We're still within that uncertain environment, and that means we need to be savvy. We need to be focusing on risk control. What I will do, I think, is I think it is worth perhaps ending at this point. I'm going to jump across. I am going to have the crypto minute. I think it's very interesting at this particular point in time. So let's end at this point. If there's any questions, just type those in. If there's no questions, I'm going to jump across and we'll do some crypto analysis on the crypto minute. Okay, let's end here. I'll see you guys in the next webinar.